Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Morning, Dan. How you doing?
Good. Good morning, Troy. Good morning, everybody. Good. We're recovering from the Olympics. I just thought, from before we get into, I know we're gonna quite a bit of back testing today, but when you think about how that's got to be with guys, okay, all these National Hockey League starts up again pretty soon. So these guys leave for 2 weeks, they go play at different countries, and then they come back. You'd think some of the smack talking would be quickly, like one guy said yesterday, I heard a guy, one of the players, he says, yeah, I play for Winnipeg, one of the brothers, whatever, Chek or whatever the names. And he says, I play for Winnipeg and they love me, I love them, but for 2 weeks of the year, they they don't like me. And it's
if I just won a gold medal in hockey, I would go around basically the rest of my life just be like, I'm the greatest of all time. My name's Troy, I'm the greatest of all time. Won a hockey gold medal. And but that's why these guys are probably more humble than me. I would definitely wear it. I'd wear it under my uniform, especially any of my Canadian friends on the opposite side of the team or on my team, to be honest. I would just constantly just flash them a little bit of that gold. Just give them a little bit of that gold.
What's interesting is that, you think of hockey, all right, the Canadians, the Russians weren't in the Olympics. And I did a little bit. I was a little under the weather yesterday, so I spent a little bit of time looking at hockey information that, I didn't follow hockey. I don't know anything about hockey. But you look at, the Russians, they have some very good Russian players, and they weren't able to play. But to me, what's ironic or kind of a funny thing is, okay, hockey's a cold weather sport. Russia, Canada, U.S. really is, the states that maybe produce the hockey players. There's a lot of, Minnesota, Wisconsin, Chicago, North Dakota. But the last two Stanley Cup champions, they're from Florida. It's a Florida team, and that's got to be a weird vibe. The best team in hockey the last 2 years in beautiful Florida, 80 degrees.
Yeah, that's right. Just go down to the beach and, practice. Listen, I think I speak for everybody when I say it's a wonderful time to be an American. So, on that note, listen, Dan, we came out with Nvidia in the back tester. Man, I can't hear. Was it yesterday, day before? I think. Before, and lo and behold, we have earnings tonight in Nvidia, which is always a fun thing. Yeah. I thought it would be fun today to just kind of do a little back test extravaganza. So I've got 4 tests to look at today. And do you care if we just jump in, Dan, and kind of give the people what they want, and then talk about it and go from there?
Yeah, that should be neat. Yeah.
Okay, cool. So, all right. So this is a portfolio of Nvidia earnings. Okay, I'm not suggesting you should run this as a portfolio. I just wanted to give this out to people so you could have it in one place. And so I put it in the Discord. And I put it in the chat. So there we go. You guys have access to this now. A couple caveats. Are these earnings dates correct? Well, it depends on what you think, how accurate you think AI is at this point. Because I just asked AI. And the last couple are correct, but no promises. I did not verify each date, so you'll have to do it. But the good news is, even if it was a wrong date, it's a winning trade. So hey, so I'm going to go through them quick. And this
Hey, Troy, can I go just for 2 seconds back to that earnings thing?
Please.
What is the on that earnings thing? If you bring up that, just the back test, which I think is wonderful. So you back tested was that the previous? Oh yeah, slide. Did it take it like from the night before? Does it show the gap? Because that's what you're really looking for at earnings, the gap from the night before to.
Yeah. Each test, I'll show you each test.
Okay, I got you.
Yeah, perfect. Okay, so let's go through each one real quick, and I'm going to start with the 2-day. Okay. Oh no, that's my favorite one. I want to save for the end. Sorry, no, you didn't see that. This is a 2 DTE put spread. Okay, so what are we doing in this trade? It's as simple as you can get. It's as American apple pie as you can get. Just, winning gold and going to the lake. American is it. So what are you doing? This is since COVID. We have dates going back to 2013. To be honest, I don't trust anything pre-COVID with this because Nvidia's move has been in the last 5 years.
Yeah.
And so you could definitely test it, but this is kind of what we're rolling with. So feel free to adjust it. The dates are in there actually.
Yeah.
So this is February 20th, COVID days to February of this year. Okay. And you were opening the trade at 346 on Wednesday. So it'd be today. Okay. Again, not optimized. The minutes aren't optimized. I picked a random minute towards the end of the day. We're only trading this on the Wednesdays, the dates of earning announcements.
Neat.
So we're doing this at 3:46 p.m. We're going to just do one contract just to test it. We're going to exit the trade tomorrow at 9:32 in the morning. Almost as soon as the market opens, we're going to exit the trade. And then I've got some entry and slippage and closing and all that stuff. So, Dan, selling puts in Nvidia has worked.
Yes.
That's kind of the takeaway of all these strategies so far today.
Yeah. Yeah. So it looks like, when you think about the last 5 years, the test is 5 years, right? So
yeah,
Nvidia's grown quite a bit in the last 5 years, and most of the earnings this is just saying, most of the earnings were up, which is pretty neat. The only thing you'd want to say on this, Troy, is, hey, since it worked, wish I would have done a 30 delta.
Oh,
wish I would have done a 40. Wish you would have done whatever that is.
Woulda, coulda, shoulda.
Woulda, coulda, shoulda, a higher delta just to get a bigger credit. But at least, so what was a typical credit? You're getting
anywhere from $80 to $1.20 was kind of the range.
Yeah.
And this is my favorite one, Dan, to be honest. You put it on at 346 when the price is 304. You take it off the next morning at 9:32 when the price has gone up almost $80.
Yeah, good. And I think what I really like about this is the fact that you can test the earning. So many people, when they play earnings, if you ask them, well, what happened the last earnings? Oh, I forget. How long have you been trading this? Oh, a while. And you don't remember the earn. This is great. And you can also see trends. I wonder I was thinking about this the other day, Troy, with Nvidia. Nvidia always used to be, wouldn't you agree, like the number, it was the stock, and it's still pretty significant. That could move the market. It seems like it's had a little less luster, just maybe there's other stocks in that space. I don't know. But interesting test to start. 21 winners, only a 91.3% win rate, Troy. And
59% capture rate. So let's go on to the next one. You think to yourself, well, that's pretty good. I wonder what if I went further out in time, what it would look like instead of a 2-day, a 9-day.
Yeah.
Well, similar. That's what the answer is. Very similar. So,
and you've had no rails if it opened down or something.
That's right. So here's the example, really, and this is the thing you have to pay attention to with this is like the 2-day, that November 19th, 2025, right? On the 2-day, you're putting on the exact same time. You got 97-cent credit, right? Yeah. And your strikes were 175 and 170. Okay. Yeah. Well, because the way vol is so juiced in that short term, if you look at the 9-day, you still almost have the same strikes and almost the same premium. You're getting a little bit more premium. Isn't that interesting?
It's very interesting to show you how much they can juice the volatility. I mean, does the volatility go up on the 9-day? It does, but it's dwarfed by what it does on the, it is the same. What is that again? So this one, you get $1.17, the 9-day.
Yeah. And on the 2-day, you get 97 cents.
Yeah. Yeah.
I mean, it's
to go whole 9 days. Yeah.
It's right there. And so it's super interesting to me. So same thing. I mean, same process. You're getting a little bit more credit, but because the way that vol is juiced on the front expiration, the strikes a lot of times are the exact same. So let's keep going real quick.
Yeah.
Let's go out 16 days.
Oh, okay.
16 days. Now you expect, especially, with 16 days, that's where the strikes should change. And if you look at it here, the strikes do change. So you get down a little bit more. You have a little bit more range in that regard, right? Yeah. And remember, all of these, we're closing the next day at 9:32. So you'd be out tomorrow morning at 9:32, win, lose, or draw. And again, you're getting a little bit more credit. I mean, sometimes you're getting, maybe 20% more credit. And you have strikes down below where the other two are. So, but it's an interesting test in the sense that it shows you that really for a lot of earnings like this, 2 expirations out is really where the vol maybe is not as elevated. It's still elevated, but maybe it's not as elevated as those first 2 expirations.
Yeah. So here you're getting, with the 16-day, you're getting about the exact same credit as the 9-day, right?
Yeah, more or less. I mean, you're getting a little bit more credit the 16-day, and your strikes are a little below. So you got a little bit more range.
That's right. You get more range. Yeah.
Yeah. And so just to show you, if you've never seen this before, which I bet everybody has, it's a put credit spread, folks. That's what it looks like. And so what you basically don't want to have happen, here's the crazy thing about closing it the next day. Because vol's going to go down a lot.
Yeah.
We could go down 9 points and you still make money, depending on how much it goes down by the open that Thursday morning. So you really have to have a major move down to start losing money on this. It can happen. I mean, it definitely will happen.
I like the way, that's a good rail when you think about it, that Troy's using is the exit Thursday morning, because you think about it, you still have all day Thursday, right?
Yeah.
Because when you're testing this, right, you're doing you're using a Friday expiration, right?
Yeah. Yeah.
And so by getting out Thursday morning, you're avoiding the rest of the day Thursday and all day Friday. The only quick thought, Troy, on these first 3 tests would be, if you look at the starting capital to the ending capital, even though you've had a tremendous win rate, especially the first 2, it doesn't get you going too far, right? And and part of it is just, in the world, and that's why, to me, when you're looking in the world of earnings, there's an expected move, and I'm going to talk about that a little bit in the our beginner thing, beginner show at 11 o'clock to just again talk, because it's Nvidia coming up. But the thing is, you've got, you're going to get it's like blast off. When you have earnings, there's no way to adjust, right? When it opens Thursday morning, it is what it is. And so when you lose, your losers, maybe look at a few of the losers and maybe what were some of the bad losers and maybe the 3-day or the 9-day or.
Well, this is the 2-day, and I mean you haven't lost much, to be honest. But
oh, you didn't? Okay.
265, you're down 252. So someone can do the math smarter than me, the percentage on that. But that's a pretty big move down, and you lost $33. Why?
Yeah.
To Dan's point, you are that rail, like the vol is going to absolutely get crushed. And so if this is your first time trading a put spread, or you're thinking about this, you have some benefits with earnings as long as you keep it reasonable, because you can definitely lose $400 on this trade. Like if Nvidia drops 10, 15, 20%, which these things can do on earnings, you're in trouble. But you have a lot of room to the downside in your favor, simply because the way the IV is going to get crushed on those 2 days, and probably those 9 days as well. Christopher, assuming same delta, not only the vol move is going to be higher, but theta is going to be a lot different, I presume. Yeah, theta is going to be different across expirations. Theta's definitely going to be on your side. Again, this is a short-term trade, so you're getting out Thursday, but theta is going to be on your side unless you go down 10, 20%. And that's why you should exit anyway, because theta is not on your side at that point. It's going to flip in a pretty brutal way for you if we lose.
I think it's a great trade, great testing. I think the only thing in the world of earnings you have to do is because you're going to get out that Tuesday. It's a little tougher to size, right? If you're going to do spreads and another vehicle where you don't have this kind of boom gap thing, you just have to, hey, if I'm willing to lose, $1,000, the whole thing, I do 2 contracts. If I'm willing to lose $500, I do one. So sizing is important in these things because it is a binary event, to that from Wednesday night to Thursday morning. And so, it's not like your typical way you would analyze something like an SPX or something. But I think it's wonderful to see these kind of patterns and to see, I would like to explore more in these things, even like the calendar stuff, because I think there's some opportunity backtesting some of the calendar stuff, because it's like, okay, let's say you had a double calendar or something. Well, you say, well, the vols are going to get destroyed in the short. Yeah. But will the longs decay? Will the longs are going to come down? But will the shorts coming down make up for, the farther out longs coming down? They're not going to come down as much, but they're more meaningful in the farther out. They have more vega, more volatility component there. But I think the testing capabilities are wonderful in these, because I think a lot of people leave money on the table because they didn't really test them enough to see precision on these things. So I'm looking forward to. And you got 5 years of information on Nvidia, and you can see also, as we're going forward, if it's changing, right? A lot of these things you'll see with earnings, because it's that big gap, sometimes their luster has changed. Nvidia, it's like I remember many of Nvidia earnings would be like, keep your kids in the house, keep the small animals, and this is going to move the market. I'm not saying it can't, but in my opinion, it seems like a little bit of the luster has gone off. So anyways, do we have a fourth one? Oh, you saved the best of the big kahuna.
Well, we have a fourth one, but yeah, a couple comments real quick. So, cool dude, seems like calendar would be nice to take advantage of that shorter GTV vol. Well, we can backtest it now. And so, Dan, I might try to work on that actually here in a little bit, and maybe we could look at some calendars for during the show today at 11.
That would be nice, because then you could see exactly, is the pump in the bottom line is the decline in the shorts going to make up for the longs? Because you could you look at calendars and typical brokerage modeling tools, and you think, how can I lose money? Because they're basically, you're looking at the expiration graph. They're taking out the shorts, but they leave the longs alone. So you're like, this is free money. Well, the nice thing with the back testing is it can say, did the longs, can you still make money? So I think that'd be a great test for the beginning to see,
that 300 to 384 overnight move in 23. That killed all of my Tom special broken wing butterflies. Like you ain't any idea that you should put a broken wing butterfly for a credit on Nvidia or any of these type of stocks?
Oh yeah.
No, thank you. No, thank you.
Yeah. And the other thing that would be worth testing, again, because you're getting that crush of the shorts, do you, play around a little bit, which would be interesting because with like a ratio DC a little bit, because, historically you get these, historically, I think we would look at more like vertical debit spreads. You just take one side, you can do them real cheap, a good chance to make 200%, just a cheap shot, right? Keeping the size small. But it'd be interesting, like a ratio spread. But anyways,
well, I've got something for you. Not a ratio, but I got a weird one that I don't like doing. But I thought, you know what, Nvidia season, we're gonna do it for the people. So
yeah.
I give you the 2DTE poor man's jade lizard.
I like it. Poor man's jade lizard. Like
now, for those not familiar with the jade lizard, a jade lizard's basically where you sell a straddle of differing strikes a little bit, but you buy a call above it, and then you have a naked put below it. That's how I've seen jade lizards a lot. But we don't do naked premium on this show. This is an American show, and we believe we in risk. Actually, that sounds pretty European, actually. But anyway, we don't do that. And so, what is this trade? Well, you are selling a 42 delta put 2 days out. You were selling a 50 delta call 2 days out. You were buying a put 15 strikes down, just kind of covering margin, covering costs. You still want it to be skewed. And you're buying a call 5 points above. Now, real quick, let's look at what that looks like. Yeah. That's what that looks like. So
leaning long deltas. Yeah.
You're leaning long deltas, and your risk is only to the downside. So it's basically, think about the structure as combining a put spread with the payoff perhaps of a butterfly. Yeah. That's kind of what I know. A broken wing butterfly is another way to look at it, with no risk to the upside. You have a lot of risk to the downside, but here's the thing, Dan. I mean, to the point about the put spread, you could lose, if you're losing $400 at a put spread to make 100, right? Yeah. You want to cap that at $1,000. Instead, you could do one of these, right? Where your payoff, if we go up, might be the price of a normal put spread, but maybe you make a little bit more because you have those shorts that are just going to get crushed on a vol move that's probably going to take it anywhere from 60 to 50, depending on if it doesn't do anything. I mean, I could see something like that.
Yeah.
And so, so this one is interesting to me because, you look at this, you tend to get a little bit more of that premium early on. So, you're getting a credit, for a good size credit, and, your margin is larger than your credit, but it's that's a pretty good ratio to credit to margin is the way I look at it.
Yeah. It's I like that. And it's, I mean, obviously people could play around with the widths. They could do the call side.
Oh, for sure. Yeah. It can be improved upon.
Yeah. Play around. But I like the concept, because the key is when you have these big moves like this, right, Troy, with the gap for earnings, you got to collect enough on your winners. You don't want one loser wiping out 8, right? Or 7 or whatever. And again, I like that you're just getting out right at the open, right?
Yeah, you don't play the game. Don't play the max payoff game. Especially look at this is actually the thing that's I've never been tempted in jade lizards because I don't like holding things that long. And most jade lizards I've ever seen are like 60-day jade lizards, which are it's not my cup of tea.
Yeah.
But this is nice. I mean, it's a small data set. There's things you have to remember this with backtesting. Earnings has a small data set. But that's nice. I mean, that's nice to be able to get out the next morning. Now, you're going to get days like this where it's like it's gone down just annoyingly enough to lose, but I mean, in general, it's worked. And to Tom's point, it probably will get crushed. You probably will lose any bullish trade. Just now that I've done only bullish trades, it'll probably not work in our favor, but I don't know, Dan, this one's tempting to me to put on just to see.
It is. And what would be the margin on one?
Anywhere from, $600 to $900, basically.
Yeah. And again, sizing's everything, right?
Am I doing 10 of them? No, I'm not.
Yeah. And I think as long as somebody comes into it, like into the arena like that, because, and another thing maybe to talk about with Nvidia, maybe today would be, the whole concept of, I know in the you have the 0 day, a lot of 0 day credit spread folk in the option omega community. Well, there's a whole world of, doing iron condors or just selling strangles, right, for earnings, which is it's a very high probability thing. But when you lose on that, because you can get a lot of it, I try to look at, like, maybe we can look at an example in the at 10, like close to 2 times the expected move. So if you look at Nvidia, for example, today, the expected move is $10. So the 2 times the expected move concept would be, can you sell, if Nvidia is at 190, looks like it's going to open near 195, right? So it looks like it's going to open near 195. The expected move for earnings, which is coming out after the close, is about $10. So if you could get, close to 2 times the expected move, so meaning you're going to sell like a 10 delta call somewhere near, 215, right? Might be 212 or 210, and you sell a put maybe at 175 or 177 and see what the credit, those are good. I mean, those work very high probability. Some people I know, Tom Sosnoff for a long time would just sell the strangles, right? And it just, for me, it just felt a little rough because you're saying, well, the vols are going to come down. Yes, but you're meeting, you're like, Dan, you want quiet on the west side of Chicago at 2 a.m. Go to the west side of Chicago. Yeah, but there's a reason it's quiet, right? There's reason, what's going on. No one wants to go out. And I think with the short strangles, my problem would be, how do you size it? Because, it's a binary event. So I think there has to be tremendous respect coming into earnings, right? And try. I want to leave it on one note. I was riveted, speaking about respect. I was blown away by they had a baseball documentary of the high schools in Japan.
Okay.
You watch that, and it's just, I'm thankful I went to high schools in the U.S. I mean, in terms of, you could say much lax. I mean, they're basically boarding schools, and they're producing, I mean, these are like baseball factories. And you wonder why Japan is so, they went to the guy Shomin with the guy in the LA Dodgers.
Yeah.
His coach. I mean, these guys are kind of funny, but they're like drill sergeant times 10.
I can't imagine.
I mean, they basically, you go to high school there, it's a baseball school, right? And they eat rice 40 times a day.
Yeah.
But anyways, no, I think these tests
that part
are
I could get on board with that.
Yeah, I think these tests are great. I think that the ability to back test these earnings, because I think there's great opportunities, but I think people have been winging it over the last 3-4 years, and now you have real data. So I'm excited about it. We can pick that up again at 10.
We will. So I'm going to call it right now because we're going to get back to back testing a little bit and prepare for that so that we can show some stuff. So I'm excited. It's Nvidia day. We'll see what happens. I don't remember when they report. If they reported right at 4, I'd be tempted to get on. But if they're like 50 or whatever, I don't want to mess around with that. So anyway,